Well, look, there's no doubt that we're in, I guess, remarkable times generally in our capital city housing markets. The key driver of all housing markets, particularly of price, of course, are interest rates. We're in this period now where we haven't had a change in interest rates for now over 2 years. We have interest rates at that record low 1.5%. We've had that over 2 years now. We've never had a period of interest rates at a single level ever since the Reserve Bank's been setting rates. So what we're seeing is that the interest rate driver is now out of the equation, and what we have seen is those very strong markets of Melbourne and Sydney, once we've taken interest rates out of the market force, have now started to, I guess, dissipate in terms of prices growth. And this, of course, is to be expected because a lot of that pent-up demand, a lot of that boom-type energy has now gone, because if you can't put upward pressure on house prices unless you've got a lower interest rate or a higher income. And once that's gone, you know, we get into this very flat period, which we're now evolving into now. But of course, the key in between phase is confidence, and we've seen almost a crisis of confidence in the Melbourne and Sydney markets particularly. And this is now starting to resolve itself with lower prices, and it can tend to be self-perpetuating, because people start to put off their buying and selling decisions, and you only get those non-discretionary type of sales that are occurring, which looks like prices are falling, which keeps confidence low. Now, this will only be a short-term influence on the market, because the perplexing scenario with our markets is the underlying drivers of the capital city markets, with the exception perhaps of Perth, and even that market's improving, are very strong. We have strong economies, we have strong migration, we have a shortage of rental properties, and all these factors, of course, we also have strong first home buyer activity. All these factors mean that demand will move ahead of supply. Now, where does Brisbane fit into all of this? Well, Brisbane has actually punched above its weight in a sense over the last 4 or 5 years, since we have had these booms in Melbourne and Sydney. Now, Brisbane hasn't had obviously the same response that Melbourne and Sydney have had, but it is actually growing in quite a remarkably consistent way from house prices over the last 4 or 5 years. In fact, there's one factor we haven't spoken about, and that's the organic growth of demand that Brisbane is experiencing in markets and sub-markets that are different from that first home buyer, from that typical migration style of demand. Now, what we're seeing now is the development, the need perhaps, certainly the desire for Brisbane to embrace a different type of apartment living, and that's more of the executive style, the larger apartment, and that's a part of the market that's certainly continued to thrive despite all the outside conversation about too many units and the nature of supply in Brisbane. And areas such as Newstead have created living environments that have a different flavour and a different characteristic from those particularly at the south, the new development to the south of the city. And I think this is now something that's accelerating in terms of momentum for lifestyle choices that locals are looking for. That apartment lifestyle. And this is something we see worldwide. It's something we're seeing Australia-wide now. It's not just affordability, it's not just amenity that's driving demand for apartments as it typically has been. It's more cost effective, it's closer to public transport, so I'm going to buy a unit. No, it's about, I want to live in a unit. I want the lifestyle of a unit. I want the sense of community that units can offer me. I want to be in an environment which is providing me with infrastructure and amenity, right? Like a one-stop shop neighbourhood, but it's in a building, right? And this is the type of development we're seeing, the type of, I guess, force we're seeing create demand from different areas, from different buyer types in Melbourne, Sydney, and of course now Brisbane. And we're seeing empty nesters, those who want to downsize, from the big home into something closer to the city, but in a modern environment, a managed environment. We're seeing families starting to embrace apartment living. But of course, it's also the sense of a quality living environment from those perhaps professionals that want something different from the traditional detached standalone dwelling, and something more of a cosmopolitan flavour to it. And I think that's what we've seen, particularly areas such as Newstead are providing this, and demand, it will only rise because there's only been really a narrow provision of supply along those particular lines. And you never really had to convince someone to come and live in Queensland, particularly if they're from Melbourne and Sydney. But look, it's always about, chasing the sun, the lifestyle, the climate, and it's also affordability. But I do think affordability is now becoming a key driver of interstate migration into southeast Queensland. Now, we saw that in 2014, at the end of the mining boom, the end of the fly-in, fly-outs, that there was a sharp decline in interstate or net migration into Queensland. No surprise, the jobs weren't there anymore. We created this sort of fly-in, fly-out, irregular, casual workforce. When that work dried up, of course, those workers returned to more fertile economies such as Melbourne and Sydney. But now we're seeing a reverse of that as prices have skyrocketed in Sydney particularly. Of course, Brisbane offers, not just the lifestyle and the climate, but also affordability, significant affordability advantages. The Brisbane median is still half of that of Sydney, whether it's a house or a unit, and it doesn't have the compressed feel that the much denser Sydney housing market has. And it's interesting to see that Brisbane at the moment, or Queensland at the moment, has the highest rate of net interstate migration of any of the states. Is that southeast Queensland is now at the head of the pack. Prices are still rising, flattish price growth, but still growth, and also in units, which is remarkable given that, it was almost a truism last year that the Brisbane market was oversupplied, saturated with units, and that we'd have empty units in Brisbane, for years. Well, we've seen that certainly confronted. The reality is that we have sharply declining vacancy rates. Rents are rising at over 5% per annum at the moment for units. Unit vacancy rates are lower than Sydney, can you believe? And, that market has rebalanced very, very quickly. And unit prices are rising now, albeit gradually. They're certainly on the rise. Now, this is completely counter to what the market conversation was a year ago. And I think, again, this reinforces that Brisbane, is a confident, resilient and robust housing market. And when we look at that Brisbane market, particularly in terms of its investment attraction, it's offering yields of over 5% at the moment. And I think the coming force in terms of investor focus will be yields. Of course, it's always been a positive for capital growth. We all like those, tax-enhanced capital growth gains that we get with investment properties and the family home. But in this future economy, this future economic environment where we'll see flat-ish interest rates, low interest rates for the longer term, I think that we're going to see more and more emphasis on yields as a positive for investors' return on income. And Brisbane now continues to have that over 5% yield for units. Some pockets have higher, 6%. And I think that this will help to accelerate the return of investors to more normalised levels. They're not far away from normal now, but certainly they're lower than they have been. And I think those high yields and rising rents and tight vacancy rates will attract investors and perhaps into pockets which are offering even higher returns, higher yields. And again, it's a reflection of the positivity of the Brisbane market, that it can maintain yields above 5%. I think those yields are really telling the investor that this is an undervalued market, right? And that opportunities are here now. And we only have to look at comparisons with median prices in Brisbane versus Melbourne and Sydney just to see that that's a reality, that this market is undervalued. And that is why yields are so much higher. Sydney, where yields are just over 3.5%. So I think that we'll see a return of investors into the Brisbane market. I think that yield is becoming more of a factor in terms of attracting, particularly in this very high-yielding, relatively high-yielding Brisbane market, and with demand for rental properties clearly accelerating as a response to strong migration, particularly interstate migration, also given that stock is starting to become limited.